Welcome, everyone. I'm Jerry DuPaw with Guaranteed Rate, and this is our Achieving the American Dream podcast. And today I have a special guest, Joe Keegan with Brokerocity. He was kind enough to come and join us today, and we're just going to talk a little bit about the current market, current programs, things that you can do to prepare yourself to purchase or to sell. And so Joe, we were just kind of talking when you first walked in here about everyone's talking about inventory. It seems like a lot of people are waiting to sell their house because they have these lower rates. So can you speak a little bit about that, where we're at status-wise with inventory in our market in McHenry County?
Yeah, so we have just such a lack of inventory right now, and it's really hurting the buyers in the market. And I think it's just tough for people to want to leave that 3% interest rate that they have because they see the interest rates where it's 7, 8%, and prices
Right.
had gone up so high. But I think, with interest rates coming down a little bit, it's going to allow people to take some of that equity when they sell their house, that they've got a whole bunch of it because they probably bought 4 or 5, maybe even more years than that, but they've got a bunch of equity now because of the big boom that we saw. And I think that's going to allow the market to start moving a little bit once the weather starts to warm up, those interest rates start to soften a little bit.
Right.
And then hopefully we can get things moving. And the only downside to that is if you end up waiting instead of buying now, which I know there's a lack of inventory, but if you end up waiting, even though you're going to get a better interest rate, you're going to pay more for the house, because I think we're going to see some of what we've seen in the last couple of years of multiple offers on houses, bidding the price way up, and waiving inspections, contingencies, those things. So
Right.
the longer you wait, the more competition you're going to run into. It might be tougher to buy than you think, even with those lower interest rates.
It's absolutely true, and I think we will see some more inventory come on the market here. Obviously, come spring, everyone seems to wait for the spring market to sell, but you're absolutely right. I mean, our motto here at Guaranteed Rate is to marry the house and you date the rate,
Yep.
because you can always renegotiate the rate. You can never renegotiate the purchase price. Last year, we were 6.5 million homes short in the United States as a country on homes and inventory. Builders can't build homes fast enough, and they're not necessarily building the right price point of home that people need, because we're in a situation where we have two generations striving to get the same price point home. Meaning, you have the millennial first-time home buyers at a price point, and then you have some baby boomers that are looking to downsize to that same price point. So, it's a pretty unique situation that we have.
It certainly is, and I'm seeing a lot of the new homes they're 500,000, 600,000, which isn't going to be your first time home buyer typically. I'm hoping that some of those people that have those lower interest rates, that have the smaller house, looking to upgrade, maybe go buy those new houses, open up some of that lower inventory, because
Yep.
a lot of buyers are going to be between the $300,000-$400,000 range right there, and it's just not easy to get that for a new house here in McHenry County. I mean, if you go far enough north, I know Wonder Lake, they've got some options, but if you're looking to be in Crystal Lake, Algonquin, Lake in the Hills, those kind of areas,
Right.
you're not getting new construction for that amount. And the inventory you have or that you're going to be able to buy, is going to have to come from people that are selling their current residences.
Exactly.
And we just don't have enough of it right now.
The other thing is, I mean, some financially savvy people that I'm working with, they are comfortable with, being a landlord, are not selling that house. They're renting out that 3% rate, right? Maybe they pull out a home equity line of credit before they do that for the down payment on the next house, because on the next house that they upgrade to, they literally only have to put 5% down. If you can believe it, we even have down payment assistance for someone like that.
Yeah, that's crazy.
It's just unbelievable. You don't have to be a first-time home buyer. You can rent out the house you're leaving and also get down payment assistance. It's pretty unique. We have that situation too, where there's going to be a lot of people, turning into landlords. But that is the best way to build wealth in this nation, is to have a real estate portfolio. It's next to the stock market. There's nothing better, really.
Yeah, it's very lucrative for sure. My one buddy called me that he bought a house 2020, and he was all pissed off. He paid $20,000 over asking price, and he's like, "Oh, I paid so much for this house. I'm going to be stuck here forever." And I think he called me probably about 6 months ago. He's like, "I've got about $100,000 in equity," and
Glad you paid that 20,000 more.
Yeah, exactly.
Yeah.
And he's like, "But I don't need to get anything now." He's like, "But I'm thinking, I want to build a house in the future." He's like, "So should I go buy a lot now while they're cheaper?" I said, "Well, if you find the perfect lot that you're like, hey, this is where we're going to want to be, then it
Right.
might make sense. I said, but in reality, the lots are still not that expensive,
Hmm.
um, especially for what he's going to want. He's going to want, probably about an acre, and those prices just haven't really changed as much. They're a little bit easier to get. I said, so unless you want to sit there and pay on those taxes, I don't think it's quite worth it for
Hmm.
you to do it just yet.
Hmm.
But he's excited because he has all that equity that he didn't think he'd have. And I think we're
Right.
going to run into that same situation this year where I'm going to have buyers that are all nervous about going over on asking price. And I'm going to have to show them the past where we've had people nervous about it. And then they call me back and like, look, I have all this equity. Now, I'm not saying you're going to $100,000 in equity. I don't see a big boom like that the time we had before, but I still see prices continue to rise at a steady tick. And you will be buying into equity, just because we're still going to have more buyers coming to the market every day, but we're not going to get the inventory that we need.
Right. Yeah, we have the biggest generation of millennials looking to buy these houses, and the demographic is very large. A lot of them are still living at home, unfortunately, which they need to, get out there and, build their own wealth and buy their own house, in our opinion, just because, real estate is an appreciating asset. There's only been 4 years in the history of the last 100 years of us keeping records of home values and prices. There's only been 4 years that the home prices have gone down. And it's not like they've gone down massively. Like I think the worst year was down like 9%. And those were the 2008 era years. We solved those issues which caused that, which was, there was a flood of inventory then. There was just too much inventory
Yep.
because there was bad mortgage practices, and there was people that got loans that couldn't afford the payments, or they got certain loans that were risky as far as arms and adjustable rates, that they weren't prepared for the payments when the rates started to adjust, and there was a lot of inventory at that time, and that's been resolved. That's never going to happen again. There's federal laws in place, the Dodd-Frank Act, and all kinds of rules and laws to make sure that you have the ability to repay your mortgage payment. So that's why we have to look at income and assets, and it's a very important part of getting you pre-approved to buy a house. So I don't think the millennials were kind of in shock because they saw their parents go through that, right?
Mm-hmm.
So now they're kind of like shell shocked on it's going to happen again, or there's going to be a crash. And I'm going to wait for the crash because I'm going to get a better price. But unfortunately, the complete opposite is true.
Yeah, I certainly wish it would happen, but I know that that's just a pipe dream.
Right,
Um, I would love to be able to go back to 2007 and 8 and be able to buy up all that inventory
right,
that just became super cheap. But like you said, all the regulations and everything, it's just not going to happen that way. Even if we have a decrease, um, in home prices again, which again I don't see happening anytime soon. But even if we do have that, it's just not going to be drastic enough for it to make sense that you wait all this time to then start building wealth. Especially if that's
yeah,
something you want to do is build wealth. Waiting is not going to get you anywhere. You're just going
right,
to continue to sit on the sidelines, and you're never going to make a move. And you're going to be a lifetime renter. You make somebody else rich and
right.
wealthy, by paying their mortgage and paying down their mortgage, and then all of a sudden they're sitting on a big bank, and all you did was fund it. So
Exactly, exactly. Yep. Um, what advice, since it is such a difficult time, I mean, you kind of have to coach first-time home buyers that the first house you see and you really like and you make an offer on, you try your best and do your highest and best offer, but you got to kind of prepare them for it may not work out in this one. You got to keep trying over and over. So they have to have a little endurance in this market, right?
yeah, absolutely. So when we're going into the buying process, I go through a whole um, seminar basically about how you are going to go about the whole process. And um, you have to understand that there's going to be people that are going through this a lot longer than you have. And so they see all the pitfalls. They're going to put something in crazy that when they find that house they want, they're not going to let anybody else take it. Now, if you can come in with that mentality, which I understand it's hard because you haven't gone through all of the trials and tribulations that
Right.
all these other people have.
The journey, I call
Yeah,
it.
exactly. But if you find the house that you want, you've got to listen to the people that you hire for your team. So your real estate agent, your lender, attorney, whoever else, when they're advising you, hey, this is what it's going to take to get the house. And sadly, I've given advice where I thought, hey, this is where it's going to get the house, and it still wasn't enough. Buyers still didn't even take my advice, but even the advice that I gave wasn't going to be enough. It's just crazy out there right now. So you really have to be aggressive if you want that house, because otherwise you're going to lose it, you're going to miss out, and you're going to be sad because a lot of people, they fall in love with it before they even have an offer accepted. I mean, I always tell buyers, hey, this is an adventure, because it used to be fun, when I could show houses, 5-10 years ago, it was fun. We'd go out, we'd look at a bunch of houses. Hey, this is the one, and you'd get it, right? We're just not in that point anymore. You have to be aggressive and indulgent with your offer and make sure that it covers all the bases to make sure that it's something the seller is going to want to accept. That's another important thing too, is hiring the right team, because you got to reach out to the other side, right? You've got to have an agent that's going to reach out to the listing agent and talk with them, find out what the seller wants, moving time, price, everything that could encompass a transaction, because as you know, it's most people's largest purchase in their entire lives, and most people's largest sale in their entire lives of anything they'll ever buy or sell in their lifetime. And so there's a lot of factors that are involved, and it's important to make sure you understand the whole process so that you can get what you want when you end up buying a house.
Exactly. Yep, you're right. Absolutely. And the other thing is, I think they have to keep a more of an open mind as far as the home. So there's a lot of homes out there that maybe are in the absolute perfect area, right? But they're just a little bit run down, or maybe, outdated completely. I think first-time homebuyers have to come to the realization that they can make this their own. I don't think everyone knows about all the opportunities out there with like renovation loans.
Oh yeah.
So you can find the perfect home in the perfect area in the perfect spot that you want to be. Maybe it's completely outdated. Maybe everything's from the 60s on the inside. But you got to look past that. You got to look past that, because you can redo the entire inside of that home and get the money to do so. And you only have to put 3% down on a type of loan like that. So we can get a bid from a contractor. We can add the purchase price to everything you want done that you tell your contractor you want done. He gives us a bid, and then we have all the money and all the materials are paid for. All the work, they have 6 months to complete the work, and by the time it's done, it's like like you built a brand new house for yourself.
Yeah, and I strongly advise my clients when we're looking at houses is, let's look at what's going to cost us a lot of money, which is going to be furnace, AC, roof, windows, but it's not pretty. I was like, because you can make the house pretty. I said, if you go into a house and everything's pretty, you're going to move in and you're going to go, well, I would have done this differently. I would have done this differently. Well, guess what? A furnace is a furnace, right? So if there's a brand new furnace in that house, but everything looks like it's from the 60s, I think that's the perfect house for buyers, because you can go in, you can make it what you want to make it. You put your personal touch on it, you build the equity in the house, and you work with somebody like Jerry. You've got great programs where, again, 3% down, and you can bring all that money to renovate the house. I mean, well, I buy mine a little bit more of a unique situation, but it had owner financing, and I think it was built in 1954.
Good bones, probably, but
yeah, it hadn't been touched since 1954.
Needed to get pretty.
But I got it for the mortgage balance at the time, and the market was down. It was, I think, 2013, and I got it for the mortgage balance because the old lady was sick. The house was in disrepair. She was moving to Italy, and I fixed it all up. We just recently sold it for $210,000, and the mortgage balance when I got it was, I think, $64,000. But because I moved in, I didn't care what it looked like. I could put all my money into it to make it what I wanted to make it. I made a whole bunch of money, and I was able to, continue to build wealth by buying other properties. Exactly.
Yep.
So, but I do that all the time. I mean, the house I live in is across the street from that house right now. I bought that house for $210,000. We're still working on it, but if it were to be done today, it'd be worth somewhere between $550 and $600.
Yeah, incredible.
Those are the things that you can do when you purchase right and you renovate as you go, or as you said, get a renovation loan where you can have it all pretty done in 6 months. I do a little bit differently. I take my time on it, but
Sure.
um, those are options. So you don't have to move into something that's gross and nasty and say, "Oh, I would never live in
Right.
that." You have options.
And you don't have to do all the work yourself. You just the renovation loan, you get a contractor and they do the work. So
Exactly.
you don't. There's a lot of options out there, and the other opportunity there is that maybe those homes that are in a little bit need a lot of TLC don't have 35 offers on it like the other home that's perfect and pretty, right? So
Right.
there's a lot less competition probably for that type
Well,
of
it's
home.
funny you say that because the house that I live in now that we bought, it was on and off the market for I think a year and a half. I
Uh,
mean, it was obviously a little bit different time, but again, there wasn't a bunch of people looking at it because it needed all that work.
exactly.
Um, and that's the thing we can do too for buyers is find off-market properties
Right.
that if they need work, if you're okay with that, which you should be because of the programs that are
Mhm.
available, you can get yourself a sweet little deal where even if you think you're overpaying a little bit, you're still going to have equity almost instantly because
Mhm.
you're going to do all these things to it to make it look real nice. And that way you don't feel stuck. If you feel like you want to move and you're ready to, put your house on the market
Exactly.
and then you can go wherever you want.
And the home prices are doing nothing but going up, so you'll have equity there, and you'll can
Yeah, that's exactly
move on.
right.
So, um, let's see there. Did you have any?
Yeah. So, well, can you tell me more about these renovation loans? Like, can you buy literally anything with it, or are there some stipulations of how much work that can be done to these
Sure.
properties?
So a lot of the renovation loans have stipulations where you can't do anything structural, meaning you can't like pour a foundation and extend the house out that way. You could, but anything walls in can be included in a renovation loan most likely. And there are products that even allow for pools and fences and all those others, landscaping, all that
Mm-hmm.
other stuff as well on the outside. So we have every single renovation product that's available on the marketplace. Guaranteed Rate has. We have conventional loan options and FHA loan options, um, and a lot of them, the FHA, you can put 3.5% down. If you're even a repeat home buyer, can put three and a half
Sure.
percent down on that. For a first-time home buyer, for the conventional product that we have called Home Style, they can put 3% down, like I said. So there's plenty of options out there for that type of financing, and there just should be a lot more people in our area taking advantage of it because the equity they would build would be incredible. I mean, for example, myself, I bought a home, I think like in 2007 or so, in a neighborhood that was a new construction neighborhood, and it was like halfway done. And all of a sudden, 2008 happened, and the builder went out of business,
Mm-hmm.
right? So every other lot was like empty,
Sure.
right? So, but I knew in the back of my mind, eventually this is going to get built up, and it was a perfect like ranch house. I'm a single dad with two little girls, and that's all we really needed with a full basement and a nice
Ranches are
backyard.
nice.
Yeah, it has a golf course pond in the backyard with fish. The girls go fishing. It's like a little
Nice.
retreat in the backyard for them. So it was perfect for me, and I didn't mind that every other house wasn't built. That was fine. But the funny thing is, about 3 or 4 years ago, Lennar came in there, a big builder, right? And I swear to God, within 3 months, every lot had a house on
Oh my goodness.
it. I mean, that's how fast they put up these homes, right?
It still wasn't enough.
No. So during that 2007, 8, 9, 10, up before that all happened, I was slowly renovating. I was slowly updating it. An old lady owned the ranch home. It had carpet and tile, all
Sure.
white and like gold fixtures everywhere, right? Now you walk into it and it looks like Batman owns the house. I mean, I did absolutely everything as far as the floors, you know, made all the fixtures really cool and stuff like that. And that's really kind of all you have to do. New paint, just kind of make it your own, and ripped out all that tile, and there's no more carpet. It's all just all wood floors and stuff, and redid the basement and things like that. So
Nice.
so now I've been slowly updating it, upgrading it or whatnot. So now these new homes that are built right next to me are my comps for my home, and since I updated my home, I'm pretty much probably at the same price point.
Yeah.
And to be honest, the older builder was a lot better quality.
Sure.
So
You
you know,
typically see that
yeah,
with some of the older stuff. It's
right.
just built different.
Right. Yeah, it wasn't thrown up in 3 months. They took their time, and it's really good construction quality, as far as the older homes in the subdivision. So that's just an example of now my home's going to be worth pretty much just as much as these newer homes that are right next door, and I gained all that equity, through that journey.
Yeah,
So yeah.
that's awesome. So if somebody were to get a renovation loan, can they move in
Hmm.
during that process, or is it something they've got to continue to live in mom's basement until
Right.
all the renovation's done?
It depends on how much needs to be done, and is it going to be livable and safe while you're there. So,
Sure.
and there's some renovation products where they can finance the mortgage payments for that 6 months into the mortgage. So if you can make that work out, where you can just delay moving in and have those mortgage payments covered in the
Oh, that's
renovation
nice.
loan, yeah, that really helps out.
Cool. Yeah, that's definitely good to know because I know some people they're just fearful of, well, I want a house now,
Right.
and if I don't want to continue in
Yeah.
my current
But
situation.
if you're remodeling just a bathroom or a kitchen, or obviously you can still live and have people there working in your house. I mean, people do it all the time, right?
Oh
So
yeah,
you can make it
absolutely.
work. Use the bathroom sink to do the dishes for a
I've
couple of weeks or
I've done
something.
my fair share of that. That's for sure.
Right. We have 8 different down payment assistance programs at Guaranteed Rate, and what a lot of people don't realize is they can literally go to a closing table, and I can set it up so they get their earnest money back and their appraisal money back that they paid up front, that when they had to, because when you buy a house, you get under contract, you have to give a good faith deposit, earnest money.
Yep.
Maybe it's $1,000. You have to have an appraisal done. We have to make sure the home is worth what you're buying it for. Those, we haven't really been seeing any appraisal issues,
Sure.
obviously, but that's something that's an expense, like $500. But there's some down payment assistance programs, and if we structure it correctly in the way where we utilize the down payment assistance, and maybe we ask the seller to help pay some closing costs, and you can even get a seller to pay closing costs in a bidding war, and this is the way you do it. I mean, say you need to pay at least $320,000 to get this house, and maybe it's only listed for 300,000, right? Um, and there's multiple offers on it, so you could offer that person 325 and ask for a $5,000 seller credit. So that seller is still getting 320,000, which is still $20,000 over the list price. And they're probably going to go with that offer compared to someone that's just offering them 315 with no
Right.
seller credit, right? So if they can get that small seller credit to cover some of the remaining closing costs, because the down payment assistance does cover a lot. It covers the whole down payment plus 1.5% of the closing costs. The one I'm thinking of, it's called well, it's a 5% down payment assistance down payment program.
Pretty strong.
Yeah, so it covers the 3.5% down payment plus 1.5% of closing costs. So if you get a little bit of a closing cost credit, you can actually set it up so you don't need any money at closing, and you're allowed to get back at closing, like I said, the money that you put into it, which
Mm-hmm.
would be the appraisal, the earnest money. And if you get a home inspection, which is highly recommended, any realtor is going to
Oh
say
yeah,
that,
absolutely.
that money that you paid for that, you get back too. So
Wow.
so I kind of call them cash out purchases
Yeah.
in a way. But you can really get into a house with not needing any money at all, and definitely that mortgage payment is most likely going to be much less than what you're going to be paying for rent for that same type of home, right? So I mean, rent prices are going up as well, aren't they?
Oh yeah. Rent prices. I mean, everything up is going up across the board.
Mhm.
But it sounds like you don't need the 20% down, which is what everyone kind of seems to
Right.
think is the norm. And I mean, quite frankly, that's just not realistic anymore. 20% down is a whole bunch of money, especially for
Sure.
the prices that we're getting into. I mean, we're
Right.
talking 60, 70, 80, hundreds of thousands of dollars sometimes to get that 20% down when
Yeah.
you really don't need as much down. I think it's probably more important to get your financial house in order as far as your credit score goes.
Exactly.
Um,
Yep.
I mean, could
Yeah,
you speak to that a little bit?
credit score makes a big difference. So just for an example, I'm just going to throw out some round numbers here. So say you have a 780 credit score and you want to put 3% down on a house, and you have mortgage insurance if you put less than 20% down. But if it's like a $250,000 house and you have a 780 credit score, that mortgage insurance is probably going to only be like $60 a month. Not
Mm-hmm.
a huge deal. And you get to get rid of that mortgage insurance once you get to that threshold of having the 20% equity as you pay down your loan and as your home appreciates. So you can call your lender if you think that you have the 20% equity. they'll send out an appraiser, and if you do, they'll drop off that mortgage insurance completely. So that $60 a month goes away eventually. So it's
Sure.
not permanent. Now, if you have a low credit score, say a 620 credit score, and you're trying to put 3% down, that mortgage insurance is probably going to be $400 a month. So that's the main key difference. It comes with the mortgage insurance, and obviously the interest rate too is a little bit different between the two scenarios. But it's still not impossible to do it. In that scenario, when you have the lower credit score, we probably would go with an FHA loan, which has fixed mortgage insurance for everyone. It's all the same. That's going to be the cheaper option for them with the lower credit score. Now, the thing with the downside with the FHA loan would be that the mortgage insurance, you can't get rid of it. So it's going to be for the life of the loan. So eventually you're going to be refinancing that loan. And to be honest, any loan that you get right now, you're going to be refinancing. It's not going to be your final end of payment, and you're going to be refinancing to your benefit. When it comes to rates, are going to start coming down here, and it's all about the timing for that. You got to make sure we time that correctly as far as the refinance.
Yeah.
There'll be options to do no cost refinances and things like that to get down to a lower rate.
So I've had people tell me in the past that, hey, I don't want to refinance because I don't want to start my clock over again. But
Yeah,
the interest rates are lower. Can you explain
sure.
how
Yep.
that may not be true?
Well, there's ways that we're able to put the term of the loan, whatever you want the term of the loan to be when you go to refinance. So if you want it to be a 28-year loan because you paid 2 years into it, we can do that. But if you really look at the math and the amortization schedules, there's actually a smarter way you can do it. You can take the money that you're saving and apply that towards principal, and you're actually be paying the mortgage off faster doing it that way than me making the term a 28-year mortgage. So you just need the right financial person that knows all the strategies and tricks of the trade of being able to avoid paying as much interest as possible is the goal, right?
Yeah, absolutely.
So and there's ways to accelerate a 30-year mortgage. You don't necessarily need to have a 30-year mortgage for 30 years. There's definitely different ways you can approach on how to pay that mortgage to skip ahead on the amortization schedule and knock off years easily.
Yeah, and I think that's why it's really important to come in and talk to someone like yourself when you're looking to buy or refi, or you're just thinking about it, because we're not people that you're going to come into and we're going to be like, this is what you need to do. We're going to lay out your options for you and say,
Right.
hey, this is what you can do to go buy a house. This is what you can do to refinance if you're looking at everything. You shouldn't be embarrassed about where your financial house is, because we're here to help you get to your goal, so that you don't stay stuck in a bad cycle where you can't get out of it, when you could come to us and we could say, hey, you're not ready right now, but hey, 6 months down the road, if you do ABC, you can be ready to buy. You can be ready to refi.
And don't feel free to call us, and there's no cost or obligation. You're not wasting our time. We are never too busy for you to get that stuff figured out. Because I help people all the time with getting their credit score up. Each month I call them and say, have you done this, this, and this? And we get them to a spot where they can purchase it. Maybe if they were at a 550 credit scores, sometimes within 3 or 4 months, I can get them up to a 640 credit score, and all of a sudden they can get down payment assistance, and they can buy a house. So it can happen real quick, and you just need to have the right advice. You don't have to worry about knowing all these different programs and loans and which one should I use. I'm going to present to you all your best options, right? So, you're going to have an email from me once I do a pre-approval. You'll have your pre-approval letter, but then you'll have, every single loan option that's available for you that makes sense. I'll put in there for you so you can then decide what would be best for you. So, lean on us. Definitely call us, email us, bug us, please. We're here to help you.
Right? Yeah, absolutely. Now, Jerry, are there certain products for certain people, such as, let's say, first responder, military, things of that nature? What special programs are out there for the people that are helping the community?
Well, Guaranteed Rate definitely supports our military 100%. We are a company that never charges a veteran any lender fees whatsoever. So, and our rates are absolutely fantastic when it comes to VA. A lot of our leadership are veterans, so we really respect that, obviously. That's awesome. And we thank all our veterans for everything they do for our country. So that is one huge key benefit. There's doctor loans, there's nurses loans, those type of loans come at lower down payments, and maybe we don't look as stringent on their student loan balances because some of those people have pretty high
Oh
balances.
yeah, absolutely. Yeah, that's the truth for
So
sure, which is
yeah,
nice.
yeah. So there's definitely opportunity out there, and really there's opportunity for anyone. You don't have to be in a special trade to buy a house, but because there's just so many, like I said, down payment assistance and grants out there. We have some and newer grants that have just came out within the past like 6 months. We have some with Fannie Mae and Freddie Mac where we give just $3,000 checks at closing, just grants. Like you don't have to pay them back or anything like that.
Wow.
There's closing cost credits that come with it. We have one called a special purpose grant that is based on where the person lives currently, and there are a lot of areas in our market that people would qualify for this, and that is an awesome grant. That's $8,000 worth of assistance that they never have to pay back. You can buy a 4 unit with that up with as little as five
Wow.
percent down.
Yeah, that's huge.
Yeah, so those are pretty unique products that we have. So again, there's just so much out there and available currently for people, and they just need to believe you will. You can buy a house. You can do it. You don't have to rent.
Yeah.
As long as you have a job and some income, and sometimes if there's not enough income there, maybe you have a relative that's willing to help. Maybe a grandma or a grandpa that has Social Security. That maybe we can put her on the loan too. She doesn't have to live in the house, but she can help with qualifying with income, right? So that happens quite often. We also have the situation of the baby boomer generation needing to help their parents with housing, finding housing for them.
Mhm.
And we have something called the family opportunity loan. So even if someone lives in Florida, say, a baby boomer lives in Florida, but they're trying to buy a house for their mom that lives here in Illinois, normally they would have to do that as an investment property,
Yep.
right? Because they're not living in the house. We don't look at it like that. If you're buying it for your parent, if you're buying it for someone that's disabled, that's another primary residence. We actually let you have two primary residences
Yeah,
in
that's
that
awesome.
scenario. So that really helps out a lot of people with trying to take care of their elders and stuff.
Yeah, that's huge. Because everybody's situation is different. I mean, like you said previously, anybody can buy a house as long as you've got the income. And I think what a lot of people need to realize is you're not, especially first time home buyers, you're not going to be going into buying uh, what you grew up in right away.
Right.
You got to start somewhere, whether it's a condo or it's a 2 bedroom house, whatever. If you start somewhere, you can start building that wealth. You're paying towards it instead of paying rent somewhere. You're going to pay towards it. Then you're going to have equity. Now you've got a bigger down payment for when you go to buy your next house because you're going to sell your house. You're going to pull the equity out,
Mm-hmm.
and you can go buy your next house. Or you can, if the rents keep going up, you can rent it out if that's
Exactly.
what you want to do. And
Exactly.
then you just keep having houses because to rent out houses, there's a reason that a lot of the rentals are smaller houses because more money can be made on those, right?
Mm-hmm.
It's
Mm-hmm.
especially here in Illinois, the taxes are so much higher.
Mm-hmm.
The higher house you get, it's harder to rent out a 4 bedroom, two and a half bath, 3,000 square foot house
Right.
because your tax bill will eat you alive. When you can move into a 2 or 3 bedroom, 1 bath house now that you can rent out for, I don't know, I think they're going for like 1,700, 1,800 bucks a month right now,
Mm-hmm.
and those are only going to continue to go up.
Right.
So you're better off buying sooner rather than later.
Exactly. Be
So
your own landlord, and you
yeah,
can no rules you have to follow. You can have your own pets. You don't have to worry about anything.
exactly, which is really nice. Um, so we had a an interesting scenario. It kind of goes with they still had a mortgage on their current property, and they
Right.
wanted to buy something else. Can you explain to me how all that happens? Where somebody else might be moving into your house, and I can kind of explain how things worked on my end because these folks were moving out of state.
Right, right, and those are complicated transactions. We actually had two veterans actually that were looking to sell their home here that their kids grew up in and everything, and they were looking to move, I think, closer to their family because I think their kids might have moved
Yep.
to Ohio or
Yeah,
something.
they had sick
So
family and stuff. So
yeah, so they had to juggle with being able to sell this home here, which was a much higher price point home, which is kind of a difficult home to sell currently. There's not a lot of inventory out there for the price points that we've been speaking about. Well, when you get up over $1 million or so, then there's not a lot of buyers.
Yeah, it gets a little bit more complicated because
Right.
you have less buyers, and the reason you have less buyers is obviously you need a lot more income. So we're talking,
Right.
the 1% of the population, but as well as
Right.
the tax bills that will eat you alive on those. Because
Yeah.
they're touching $20,000 a year.
Yep.
So
I know they had a long journey with this because they were working with a whole bunch of different realtors I know in the past to try to sell this house, and then thank God they found Joe, because you were able to market that house amazing. I mean, I immediately saw when you started to do the marketing, I reached out to you right away. I'm
yeah,
like,
oh yeah,
that was awesome.
I think you're the first one. As soon as it hit the market, I had my video up, and
Yeah.
and you were reaching out to me right
Yeah.
away.
I mean, you do some great stuff on social, on TikTok, to be able to help the sellers get their house out there immediately. And obviously, it helps out a lot because it worked,
Yeah,
right?
yeah. So it was a very unique situation because, this is one of the advantages of a VA and FHA loans. They're assumable. So,
Right.
could you, before I go into the story too much, could you explain a little bit about
Sure,
an
sure.
assumable loan?
So, a veteran that has an FHA loan, or I'm sorry, a VA loan, can have that loan assumed by another party that doesn't necessarily have to be a veteran. Um, and what they get to do is they get to assume the interest rate. So this particular veteran had an interest rate of 2.75%,
Mm-hmm.
right?
Yeah,
Which
it's
is an amazing
crazy.
deal. Now, the buyer needs to come up with the spread between what owed on that mortgage and what the purchase price is. So they need to come up with the down payment between that,
Correct.
right? But it's a really unique situation for veterans currently that have these lower rates. They'll be able to, they can sell their homes very, very quickly in that type of scenario. So it's a pretty unique product and
Yeah,
cool
So
way to go about it.
the buyer had to come up with quite a bit of money because it was a nearly $1 million house. So they had to come up with a few $100,000 to come up with the difference between what was owed and the purchase price. But they got a great interest rate at that 2.75%, and so they were able to assume that mortgage going forward. And that was something that none of the other agents looked into. This is what I'm saying. When you've got to find an agent that's going to look into the whole scenario and see
Right.
everything that can be involved with this. I knew immediately when I spoke with them and they were veterans. I said, "Hey, do you have a VA loan?" They said, "Yeah." I said, "Well, then I'm 99% sure that's going to be assumable." Sadly, they waited a little longer because I feel like that market cooled off a little bit more as far as the higher end compared to when they first wanted to list the market or list their house on the market. I feel like they might have been in a little bit better situation, but either way, we got the job done because we went in there and we understood the whole process. And then we go out and we find the buyer. On this particular property, I found the buyer as well, so I represented the buyer and the seller on this transaction. So
Amazing.
you got to get somebody that's going to go out there and go the extra mile for you.
Yeah.
Because if we didn't have this great interest rate, this great opportunity that should have been, told to everyone, which I did, but if they never got to me or another agent that would have saw that opportunity, they would be in A or B situation. A, still living in that house, or B, they wouldn't have gotten nearly as much as I got them for the sale of their house.
Exactly.
Just because of all that value that was added. I mean, when we looked at it, I think the difference in payment was going to be about $1,400 a month based on just the change in the interest rate because of how big of a mortgage they would have had to have gotten on a house like that.
Yeah,
so
exactly.
That was such a crazy, fun, stressful transaction, but we got it done, and Jerry was able to help out.
We got it done quick too.
Yeah,
I mean, it wasn't like it took a long time. We got it done. Everything fell into place.
I think it was 30 days from the time that we went under contract, and they, credit to their agent out in Ohio, got them a property quickly because they didn't have anything under contract because they had no idea when the house was going to sell. I had that listing for 3 months before it finally moved.
Yeah.
But they had been on and off the market for probably 2 years before that. So it all came together. You got to have the right team on your side, and things will come together.
Yeah.
So you just got to work with the right people that have your best interest in mind.
It's pretty amazing that, it's not often that the listing agent finds the buyer. That's pretty amazing. So what marketing did that draw that buyer in? Like, what did you do?
Well, it was the social media.
Uh-huh.
So my videos, they go out everywhere: TikTok, Instagram, YouTube, and I believe he found me on Facebook actually. Um,
Okay.
of one of my reels on there about the house, and
Yeah.
he was looking for something. Um, he'd been looking for a while. I think he told me he'd been looking for like 2 years. He just wasn't having success, and
Yeah.
then he saw the interest rate, so that piqued his interest, and he was looking for acreage.
Hmm.
So we didn't have as much acreage as he was hoping, but it was very
I'll
like
tell you what,
sanctuary type house.
it is a sanctuary. I went and picked up some documents from the house, and the driveway was about 5 miles long.
Yeah. They wanted to have cows there at the property,
Uh,
so they're going to get a cow this spring.
that's cool. That's
So
cool. So if you got a big house to sell, maybe in the Bull Valley area, and it's not selling, or maybe you're not working with the right realtor, you want some great advice, Joe
yeah,
Keegan's your man, man.
love to
He'll
help you
find the
out.
buyer, he'll get it listed, we'll get it done as fast as possible. So reach out to us for sure.
Yeah, well, let's look into your no matter who it is, let's look into the situation, because I think that's the most important part, is
Mhm.
really understanding um, somebody's situation, whoever it is, just diving into it and better understanding everything, so that you get the best results. You get to move when you want. You get
Right.
to make the money that you want, and you're just happy with the whole transaction. Because it hurts me to go into these and they go, wow, I all real estate agents suck. I've had no success with any of them, and I'm like, okay, well, let me understand why you feel that way. So
Mhm.
once I get in with these folks and I understand, I try to calm them down a little bit, and I
Mhm.
say, well, here's how we're going to do it differently, and this is why we're going to get the results, and it works
Yep.
out.
Yep. Let us be your guides. We can
That's
guide
right.
you through this journey, whatever it is, selling, buying, we're here for you. So again, Jerry DuPaw with Guaranteed Rate, the local office here in Algonquin. I have a team of loan officers that help all clients throughout the whole community. And Joe Keegan with Brokerocity, definitely, if you want to buy a house, list a house, or you have a home listed, this is the guy to reach out to. So we'll have our contact information for you here in the video. So,
Awesome.
all right, man. Well, thank you. Appreciate it.
Yeah,
Thanks for
absolutely.
coming.
Appreciate
Yeah,
you having me,
it was
Jerry.